If you keep your money in cash, we all know that it's going to get swallowed whole by inflation, and it's not going to come out the other side. As our good friend Ray Dalio says, cash is trash. And at no point in time has this been truer than in 2021 and 2022, at least in our lifetime. Inflation is running white hot right now, 7% in 2021. Although that's expected to come down in 2022, we'll talk about that in a bit. A lot of folks are waiting on the sideline for that next dip. They got a nice stockpile of cash on the side. However, one, that dip may never come at least as significant as you would like it to. And two, your cash is still going to get burned into oblivion just sitting there because inflation, although will come down in 2022, is still expected to hover between 3 and 4%. Lucky for you, we have stocks called high dividend yield stocks. However, they are not all created equal. You cannot just look at the dividend yield and say, oh yes, this is how I'm going to protect myself. So in this video, I'm going to be giving you the top 5 high dividend yield stocks that will help you beat out inflation. I'll even give you a very summary in the beginning of what dividend yield is, how it can help you tremendously even if the stock price goes down, and the power of compounding those dividend payouts, meaning reinvesting those dividends back into the portfolio as opposed to taking them as cash payments. Although you can. We'll talk about the differences. Let's get right into it. If this is your first time on the channel, welcome back to The Traveling Trader. If you get anything out of this video, give it a big fat thumbs up just like this. And if you want access to all of our stock picks, options trades, etc., link in the description below. Let's go. So what is a dividend yield? I'll give you a really quick summary, but I will also have everything listed out in the chapters below, so feel free to forward and rewind as you like. What is a dividend yield? Well, it's very simple to calculate. If you have a stock trading at $100 and let's just say that it pays out an annual dividend of $2, well, then your annual dividend yield is 2% because it's literally $2 divided by $100, which gives you the 2%. Hopefully that simple calculation makes sense. If not, I don't know, you got to go back to elementary school or something. So is the dividend yield static? No, of course not, because stock prices move every day. However, let's say that you put $1,000 into this company here, right? So you put $1,000 investment. Remember that it pays $2 for every share. So in this case, you're going to get $20 in dividends, right? Now, regardless of what the stock does, meaning regardless if it goes down or up, your initial investment was $1,000. You put $1,000 in there. And your dividend payout is 20%. So your dividend yield will actually stay the same as long as you're not reinvesting or buying more shares. Let's just say that, you allocated once. This is the beautiful thing about this. Let's just say that the stock went from $100 to $150 over the course of a year. Well, people who invested at $150 are going to get a much lower dividend yield because they're getting $2 per $150. However, you invested $1,000 back when the dividend yield was 2%, your dividend yield, as long as you don't reinvest, will always be 2%, regardless of if the stock goes up or down. As long as, obviously, they don't make any dividend revisions or whatever. We'll talk about that too. So if the 2022 inflation rate, it's estimated, depending on who you talk to, between 2.5% and 4%, let's just call it 3%. If the 2022 inflation rate is 3% and you have, say, $10,000 just sitting there, well, in cash, well, that $10,000 is automatically going to lose 3% just by sitting in your bank account, right? And obviously, even if it's a savings account, it's paying nowhere near 3%. You're getting something measly. So your cash is actually losing value as opposed to waiting on the sidelines, right? Now, obviously, I'm not going to tell you what to do. Just take this information and make your own decisions. But instead of waiting on the sidelines, what you can do is invest in high dividend yield stocks. This is also a strategy that a lot of folks employ as their main strategy. Everyone has a different risk tolerance. Some people are strictly dividend investors and they actually make a nice income or side income from dividends. Some people use the dividends and reinvest them, as I do, because I like that compounding effect. And I personally don't need the cash from the dividends. It's not what I use to pay my bills. Anyway, so this $10,000 is losing 3% right off the bat. Let's just say that you find a stock that's paying you 5% dividend yield at the moment based on its current price. Well, you not only are you beating out inflation, but you are actually making an extra 2% above that. So the goal of this video is not only to find high dividend yield stocks, but you also want to find quality stocks because Just because a stock pays a high dividend yield, one, doesn't mean that the dividend safety is there. That's also something to take into consideration. Stocks can, companies at any point can say, oh, we want to stop paying this dividend, or we're going to lower the dividend. So dividend safety is a huge part of the equation, and it's usually linked to the strength or quality of the company. The more quality a company is, the more legacy it is, the more that it's been around, the higher value that the company is, the safer the dividend usually is. So let's take a look at some quality companies. Here are the top 5 high dividend yield stocks, in my opinion, that you will definitely want to take a look at if you are interested in having your cash beat out inflation and potentially even go above that and make some money on top of the inflation. So stock number 1 is ticker symbol CVX, Chevron. Chevron currently pays a dividend yield of 4.31%. So even on the high side of those inflation estimates, it currently beats out those inflation estimates. Now, the great thing about Chevron is it's been paying a dividend for 34 years, has one of the most consistent dividends in all of the stock market. Not only that, it is considered one of the best stocks in the market right now, especially as inflation is wreaking havoc on energy prices. Chevron currently trading at levels that it was trading at before the March 2020 crash. And it's crazy that it is still experiencing revenue growth of 29%, even though it is a legacy company that's been around forever in a legacy industry. It is also an impressively profitable company with significant margins. So going into a high inflationary environment, especially an environment where energy is considered one of the top sectors along with banking, I like CVX here if you are entertaining a high dividend yield stock and a high dividend yield portfolio, or at least a segment of your portfolio. Now, as I said, the theme of this is investing in quality companies that pay a high dividend, a dividend that hopefully beats out inflation for 2022. This is not to say that these are the best setups currently, meaning this isn't the best time to buy Chevron. Obviously, there was a better time to buy before, and we talked about energy companies throughout 2020 and 2021. However, as I said, regardless if the stock price goes down or not, as long as Chevron pays out that dividend and it has an excellent history of doing so, then you are still making that 4.3% on your money on your money currently if you bought in at this price. So hopefully that makes sense. All right, stock number 2 is a stock that we've talked about before. It made the top stocks videos a few times in early 2021, but it is MO or Altria Group. Now, depending on whether you have a moral compass when you invest or not, some people would not want to invest in tobacco companies. However, they also diversified into vaping as well as alcohol. So they're not just strictly a cigarette company. However, it is up to you, but I'm just putting it out here for you. In my view, there really is no morals when it comes to investing. All right, I could be kidding a little bit, but almost every company has a dark history or some morally bankrupt stance on something, depending on what your values are and what you believe in. Anyway, not getting into that. But looking at Altria, its dividend yield percentage is actually 7%, almost double what some economists are expecting for the inflation rate for 2022. Another excellent value company with crazy margins, 65% gross profit margin. Its profitability is excellent. It is not growing as much. It is just maintaining where it's been. And just like Chevron, even more impressive than Chevron, Chevron had a dividend consistency of 34 years. Altria has a dividend consistency of 52 years. Now, it's good that it has that high dividend yield because Altria tends to be a little more volatile than some other value companies, even though it does, as I said, have excellent profitability and a great history with paying those dividends. But when in doubt, zoom out. And if you look at its 12-month chart, remember, this is a long-term investing focused video. But if you look at its 12-month chart, it looks like a straight line up. So even though the daily chart looks very volatile, this is a company that has been growing consistently really since before we were born. All right, stock number 3 is LMT or Lockheed Martin. For those that don't know, Lockheed Martin is an aerospace company. Yes, it is involved in the public sector, but it also does commercial sales. It's also involved in the private sector. It currently has a dividend yield of 3.6%. Now, this is what I like about Lockheed Martin. Like the other aforementioned companies, it has an excellent consistency grade on its dividends. Remember, you can find stocks that have a higher dividend yield than some of these that I'm going to be talking about. But just because it has a high dividend yield doesn't mean they are long-term holds. You can put your money in those stocks and then not even know or keep up with the news and know that they stopped their dividend or lowered their dividend, and all of a sudden you don't have any dividends coming in for that stock, and it just becomes a poor investment. Because imagine if it doesn't pay dividends and the stock starts tanking, well, then there goes your investment. So we're looking for high quality companies that also pay a relatively high dividend. Now, the cool thing about Lockheed Martin is it also has an excellent dividend growth history. Not all of these companies actually consistently grow their dividends. So if you look at historically at their dividend, you could see what the payout amount is, where it started in 1995, 0.52, and where it ended up in 2021 at $10.60. This is an annual dividend, by the way. So it's important to note that some companies pay quarterly dividends, some pay annual dividends, some pay biannual dividends. However, if you are long-term investing, you probably won't even notice it because you're just going to keep your investment there and the dividend will come in. We'll talk about whether to reinvest, which is what I do, or take cash for those dividends. But yeah, so Lockheed Martin, again, this is number 3 on the list. Excellent company with an extremely lucrative dividend that is consistent over the years. All right, stock number 4 is actually a tech stock, IBM. Now, IBM doesn't only deal with consumer technology products. They actually have a huge consulting wing. They also do equipment financing for businesses and whatnot. So they're very involved in the business sector as opposed to just, a lot of people think of IBM as just the ThinkPad laptops, but they do way more than that. And that's where most of their business comes from. Currently, IBM pays an almost 5% dividend yield. Now, I purposely put a tech sector stock in here because this can honestly be filled with consumer staples and energy companies, which tend to pay dividends. You don't normally get a tech company that pays a high dividend yield. That's sort of a unicorn. Most tech companies are growth companies, and so they're focused on actually taking those profits and reinvesting them in the company to continue growing. However, IBM does pay a healthy dividend of almost 5% based on its current stock price. As you can see here, relative to the sector median, relative to the tech sector, they pay 227% more in dividend. But also, if you look at their growth, maybe this is part of the reason why their growth is stunted, because they don't reinvest in their company the same way that, say, an Apple or Microsoft does, right? Which don't typically pay healthy dividends because of the fact that you're expecting those companies to grow. So what you don't make in dividends, you actually make in the stock price going up. And IBM has a 22-year consistency grade of dividend growth, meaning their dividend has grown consistently over 22 years, and a long history of paying dividends at 32 years. All right, and stock number 5, I saved the best for last. As you can see here, this has a whopping 11% dividend yield, or 10.8% dividend yield. This is MPLX. Well, what is MPLX? MPLX is an energy company that is involved in crude oil, natural gas, refined petroleum, etc. But there is a caveat here, and a caveat that we should definitely focus on. I think a lot of newbies will look at this and think that it pays a 10.8% yield, which it does, but ignoring the fact that MPLX is one of the rare companies that issues what's called a K1. Now, a K1 form is an IRS form, and basically when you invest in MPLX, you are part of the partnership. So they send you a K1 as if you are a partner that's receiving revenue or income, from the company. For those of you that are contractors, you'll know what a 1099 is, and a K1 is very similar to a 1099. Now, why is that important? Well, you will have to report this as income. So it does not make sense to sell your shares for a gain, if you're not long-term on MPLX, and also pay tax on that K1 revenue. So I would only invest in something like MPLX if I'm going to be keeping it for the long term, i.e. retirement. Now, it is a company that's lucratively valued at the moment, depending on which ratio you're looking at. But if you look at its PE non-GAAP, it's still under the sector median. Its margins are stellar. And for a pretty young company, it actually does have a decent history of paying out dividends. So it's been paying out this high dividend for the last 8 years. And not only that, aside from its high yield, it continues to grow its dividend. So in 2016, it was $2.21. In 2021, it was $3.34. However, I am putting that caveat there because it does issue a K1. It's just something that you should know about. It's not a boogeyman. You definitely should look up K1s if you're interested and see how you would incorporate that into your tax return. But now the question of whether to reinvest your dividends or not, like I said, I personally don't use dividends as an income. I use it as a form of investment. So I definitely want that compounding effect, and I reinvest those dividends back into that portfolio, and you could buy more shares of whatever stock you are using as your high dividend yield stock, or other stocks if you want. But I just automatically reinvest them. You can, depending on your investment platform, you can choose to reinvest your dividends. Now, a lot of folks actually build dividend yield portfolios and use that dividend yield as side income. They use it as cash. I personally don't. It is up to you. But whether you use it to buy groceries or use it to reinvest, the point is your cash sitting on the sideline in a high inflationary environment is going to get burned up by inflation. Off the bat, automatically, you're going to lose at least 3% next year if we are to go by economist estimates. Anyway, traders, my goal is to provide you the information as I see it. You do what thou wilt with that information. Hopefully you got something out of this video. If you did, give it a big fat thumbs up. Leave it in the comment section below. I'm interested to know what dividend stocks you guys actually trade if it wasn't on the list. Also, if you want to leave some helpful tips for other viewers about your style of dividend investing or what you've learned, leave that in the comment section too. If you want access to all of our trades, crypto, stocks, options, we do the daily watch list where we have our options day trade set up before market open every day. Sign up, link is in the description below. It's a great value. Over 4,000 traders discussing trades all day, every day. Would love to have you. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.